皆様、こんにちは。本日は地球環境戦略研究機関 IGES によります気候変
Good
動
afternoon to you, and thank you very much for joining the Climate Change Webinar Series by IGES. I am Taguchi from IGES, Climate Change and Energy field, and I'll be serving as a moderator this afternoon. Since April this year, IGES started a webinar series on climate change. And we have two major topics in this series. One is climate change, the other is carbon market. And today we are having seminar on the carbon market track. As we have done before, we have one topic in one seminar for 1 hour. Usually, we have this seminar at some place within the IGES building and have face-to-face discussion. However, because of COVID-19 situation in the metropolitan area, we are holding the seminar, the webinar completely online. And there are aspects that we would like to introduce to the viewers, like inside of IGES and around, but we'll do that in the future. Now, despite the situation, we always would like to continue to share the information related to climate change with you. And please stay with us. And in the webinar today, we're going to have a very focused discussion. Therefore, we'd like you to join us in a very relaxed fashion, but do not miss any part of it. Let us start the webinar, but first, let me begin with the housekeeping information. The information, the materials we will use today are already on the IGES web page. Please download. And there is a chat box URL for you to use. During the webinar, if you have any comments or questions, please give us your feedback. We like to hear your voice and use this Q&A section on the Zoom screen. If we can receive a lot of information, that will be good information for us and for you to learn and for other viewers. So please do not hesitate to send us any information. Q&A section has a button for likes. And you may not want to write questions yourselves, but if you press the likes button, for the questions that you are also interested in, please press them. We'll have the Q&A session later on, and when we pick questions, we'll also make the choice based on the number of likes. Now, during the webinar, other researchers of IGES than who are here now may respond, so we'd like you to be aware of that possibility. Furthermore, in the webinar today, we have simultaneous translation service available. Mr. Mulun, who will be the speaker today, will speak in English and be in Q&A. There will be simultaneous translation both for English and Japanese. However, Mr. Mulun do understand Japanese. Therefore, other speakers, participants, myself, and Takahashi-san will speak in Japanese, and if necessary, we may interpose some English or Japanese is necessary as needed. If you would like to use the translation service, select the globe icon, the symbol, and choose the language that you'd like to listen to. Your questions may come either in Japanese or English. So as I said, the webinar will be in 2 languages. And on the screen, we will show you the English slide, but we do have a Japanese slide set as well, which is already on the web page. So if you would like to refer to the Japanese version, please either download and print them or use them as your reference. That's it for the housekeeping announcement. Now we would like to go on to the topic of the day. The topic of the webinar today is the credibility in offset credit, and the topic of the webinar will be explained by our researcher Temulen Murun. Please begin.
Thank you, Taguchi-san. I hope you can hear me. Thank you all for joining our webinar. My name is Temoleng Murun, and I hope our webinar would be useful for you. Thank you.
Thank you very much. Now, we call her Temurun-san, so this is how I'm going to refer to her. And this is the first time she's joining us. And please introduce yourself briefly.
Okay, hello everyone. Again, I'm Temoleng and I joined IGS 2019. And since then, I've been working on GCM related work and then SDGs and recently interested in voluntary carbon and credit credibility. Thank you.
Thank you very much. And as with other researchers who had been in the seminar, the negotiation processes and the contacts with other organizations, those have been an important area, and she has experiences which will be the basis of her presentation. Likely, from the energy field on the climate change of IGES, we have Mr. Takahashi-san with us. Thank you very much. He's been with us in almost all of the webinars, but can you briefly introduce yourself once again? Thank you very much. I'm Takahashi. Yes, I've been to all the meetings, and in the carbon market track, I have participated in all the discussions, and I've been following the Paris Agreement Article 6 and the CDM related research activities. Temurun-san is a very good Japanese speaker, and but whenever we have heated discussions, sometimes she switches to English, and I would like to be careful, so I will not switch to English. Now, in my background is IGES building, and from the front, the Taguchi-san and Temuru-san are seated in the front side part of the building. I'm in the back part of the building, right next to the parking area. Thank you very much, Takahashi-san. And Takahashi-san will help us providing some additional information when some in-depth explanations are necessary. And he will also participate in the later Q&A discussion. As he said, there will be 3 of us giving the webinar this afternoon. Now we would like to ask Temurun-san to begin her presentation. Please start.
Thank you, Takachi-san. I'm now going to share my screen. Hopefully you can see. Okay, thank you everyone for joining our webinar today. And today I will explain the elements related to credit credibility. The quality of the credits are very important for the credit buyers who are considering to purchase credits to offset their own greenhouse gas emissions. Therefore, today's presentation is for those buyers who's considering considering to purchase offset credits as an option to reduce its own greenhouse gas emission. So here is the outline of my presentation. I will briefly introduce the global criticism about offset credits and elements that are affected, that can affect high quality carbon credits. And then I will share our literature review on these matters and highlight some elements that with practical explanation, and I will summarize my presentation. We have seen many articles related to this offset credits, and many of the articles have been saying offset credits is greenwashing, and it is lowering environmental integrity, undermining Paris Agreement. and also undermining business climate actions. And we saw many articles, as you can see in here. Guardian mentioned that methodology in the forest projects are not robust enough, which makes carbon offset credits don't represent valid emission reduction. And also we saw that Bloomberg also published another article about selling those credits for well-protected trees can undermine sustainability in the business sector. And we also saw the Greenpeace have published several articles about criticizing offset credits can be used as a substitute for real climate actions in the business sector. And since this much attention and criticism at the international level happening in the international level, the question related to quality of the credits have been raised, and the question is what elements actually affect high quality carbon credits, and what's the credible credibility, which credits can we trust, which credit has the trustworthy quality. And unfortunately, there is no global consensus on definition of high quality carbon credits, but we know based on the other research analysis and done by many institutes, we know these are the three key aspects of the credit credibility. First, credit represent greenhouse gas reduction that must be real, quantifiable, and verifiable, and that credit must represent 1 metric ton of additional and permanent carbon dioxide emission reduction and removals, and it should come from the project that don't contribute to environmental and social harms. In the table, you can see some of the analysis on credit credibility, and then all those three aspects are already covered in this table, in this analysis. So we have done a review on this credit credibility analysis. These analyses have done by many global environmental institutions, for example, Environmental Defense Fund and WWF and Akio Institute, the Stockholm Environmental Institute, and also international scheme, Corsia, and many other reports published by other international organizations, for example, World Bank and Science-Based Target Initiatives and international initiatives such as voluntary scaling, task force voluntary carbon market and voluntary carbon market integrity. So the reason why we conducted this analysis because there is a growing demand on this area, and also there's a potential risk associated with the low quality carbon credits. And so practical guidance crucial for credit buyers to identify what is the credible credits, which means the high quality carbon credits that they can use offset their own emissions. So in this table, I have listed our preliminary result of the review on elements that can affect credit credibility. And we have identified 8 elements, as you can see. And first one is the additionality. The second one is the baseline scenario in the methodology. Third one is the MRV system, measurement, reporting, verification system. And fourth one is avoidance of the double counting. Fifth one is the permanence. Permanence is the risk is related to the forest and agriculture and land use project. And sixth one is a social and environmental safeguard to avoid any negative impacts. And the seventh one is a contribution to SDGs, Sustainable Development Goals, which is to generate the positive impact beyond greenhouse gas emission reduction. The last one is the governance and transparency of the crediting mechanism. So for today, I will only explain the 5 elements of those 8, basically additionality, baseline scenario, double counting, permanence, and negative and positive impact. I will explain why it is important and what are the risks related to those elements and how it can be avoided in the crediting mechanism. First one.
テムルさん。
Yes.
テムルンさん。
今ちょっと通訳の方とのバランスがあったんで遅れたんですが、ちょっといいですか?
So there was a slight delay because of the translation. Can I just butt in? Since you're going to talk about specific topics from this page onward, I would like to ask 2 questions. Thank you for giving us the presentation, the explanation. So globally, as you explained, there is increasing criticism on carbon credit. And therefore, questions are asked about the quality of carbon credit. And I believe that in this webinar, there are a lot of possible buyers. Corporates are watching this webinar. So with that in mind, my first question that I'd like to ask is about page 4. So international organizations are doing this analysis. We have WRI, SPI, WWF. Some of these names are quite familiar. Names that we hear often in the space of environment. So you collected information from these analyses. I just wonder what these associations or organizations are.
Thank you for the question. Yes, we mainly collected information on those organizations' analysis because we all know those are the international one of the leading institutions and organizations globally, and they have long experience working in the environment protection and in this area. And for example, this Environmental Defense Fund is the US-based nonprofit organization, and they have done many work in global warming, climate change, ecosystem restoration, and also human health area. And for World WWF, Worldwide Fund for Nature, I think all of the many of the audience have already know about what they do. And for the Oka Institute, as it's one of the European leading independent research institute, and this is located in Germany, and Stockholm Environmental Institute, and also located in Sweden, and they also do independent research on this environmental and sustainability area. So they have experience on this environmental area and climate change area and sustainability area. So it is important for us also to know what they have been doing. And many of those organizations and institutes are already included in this task force on scaling voluntary carbon market initiative, then led by Mark Carney. And then they can serve as a technical and also the team members of the work. So that's why we came up this list. And I also would like to add one more information about this, especially this Environmental Defense Fund and WWF and Oka Institute, because they have been doing this research for before this task force has been started on this voluntary carbon market. And they have already developed the methodology, how they are going to assess independent crediting mechanism, how their carbon credits are meeting the criteria, and what are the elements that they can define high quality carbon credits. So that's the main reason we selected those literature reviews. I hope I am answering the question.
はい、ありがとうございます。
Yes, thank you very much.
まあ、国際機関で
So international organizations, non-profits organizations, NGO, NPO, which actually have long-standing experiences, and especially they are participating Mark Carney's task force. So in this specific space, I believe these are leading organizations and they have influence. Their voices will be heard. And that is why you decided to source information from these organizations. So one more question, very simply. So you selected 8 elements, of which 5 of them will be explained today. Why did you choose these 5?
Yes, for today, we chose the 5 elements because, first of all, those 5 elements are already included in the most of the criteria that done by those organization and institute, and also those are all covered in the CORSIA carbon offsetting and reduction mechanism for international aviation requirements, and also those task force on scaling voluntary carbon market core carbon principles. And also these some of the elements are really having a big growing concern on this one. For example, this additionality. There is a concern that how additional the renewable energy projects in developing countries, because there are many solar PV and wind projects are being developed in the developing countries. So without additional revenue from those projects, from those credits. So the question is being concerned how these are additional. And also there is a discussion on the baseline scenario. And we all know that task force has also evaluated to reassess some methodologies in renewable energy projects. It was explained in the previous CE webinar. And the avoidance of the double counting, this is really hot discussion now on to whether apply the corresponding adjustment set by Article 6 of the Paris Agreement on voluntary carbon market. So these are the really concerning hot discussion on today in the voluntary carbon market, and also credit credibility discussion. So that's why I choose to explain for those elements today.
Thank you very much. That's it for my presentation. So please continue with your presentation.
Okay. Yes. Okay. So very first concept, very first element is the additionality, and additionality is a concept to assure implementing project will secure greenhouse gas emission reduction rather not being implemented, which means that if greenhouse gas reduction would happen anyway, then this reduction in project are not additional. So what is the risk related to this additionality? And insufficient additionality can bring potential risk that emission reduction may not have actually occurred. So if a mitigation activity is not additional, then purchasing carbon credit from such activity does not trigger any emission reduction. And how to secure the additionality? There have been many different tests, but I have listed main 3 tests, which first one is the regulatory surplus test. The second one is the financial test. Third one is the common practice test. Those are the tests to secure additionality in the project development. And my colleague will explain about the additionality, how it's been demonstrated in the CDM project later in the presentation. Baseline emissions. And the second element is the baseline setting, and the baseline emission are GHG emissions that would occur in the absence of the proposed project activity. And so this means that this is the baseline if there is no project is developed. And emission reduction from the project are determined based on the emission under the project scenario, and also the emission under the baseline scenario. So the baseline scenario should based on evidence assumptions of technology and behaviors in the area. So the risk related to this baseline setting, why we need to care about this baseline is because if this project baseline emission are overestimated, there is a risk of overestimation of greenhouse gas emission reduction, and this leads to overcrediting. And how it can be avoided in the crediting mechanism. Very first thing is to set a conservative baseline to secure environmental integrity. And second of all, the baseline scenario, this baseline should be revised regularly in appropriate timing. And for the further explanation and example, please see the annex. Third element that defining quality of the credit is permanence, and the permanence is the carbon credits need to be represent emission reductions and our removals that are effectively permanent. And if those emission reduction and removals are not permanent, are reversed, then those credits from those project no longer serves as a compensatory function, as a offset credit. So the risk of those risk related to this permanence is this risk of the non-permanence occurs with the project that store carbons, for example, forestry projects and land use projects and wetland projects, and it can be affected by natural disaster. So then all the stored carbon can be re-emitted into the atmosphere. If it happens, then the credits have no value to represent those greenhouse gas emission reductions. In the crediting mechanism, and they have to, most of the crediting mechanism, they have established the buffer pool account. And this buffer pool account serves as an insurance mechanism, and carbon credits from individual project are set into this buffer pool to compensate if anything happens in the project field. So about also this permanence, I will explain the examples from another crediting mechanism, how they are securing this risk. So fourth element that I would like to introduce today is the double counting. And the double counting can happen in many different ways. First one is the double issuance. And double issuance means that one carbon credit is issued more than once for the same emission reductions. And the double use means that same credit is counted twice for achieving any that climate change mitigation. Double claim means that the two different entities claim the same emission reduction toward their own climate change mitigation. So the risk of those double counting, very first thing is it can undermine the integrity of the crediting mechanism and carbon credits, because 1 ton of carbon dioxide equivalent reduction is being used twice for different purposes. So that's really not what we want to see in the carbon credit. And the second risk is specifically related to this double claiming. And there is a risk of double claiming with countries' climate change mitigation under the Paris Agreement. Like before, I briefly explained that corresponding adjustment is the one rule that's set by Paris Agreement Article 6. And then there is a discussion whether to apply this corresponding adjustment on voluntary carbon markets. And then they have many different perspectives on this one. Some parties are saying it is important to apply this balancing keep booking mechanism, this corresponding adjustment, because we don't want to increase the emission in globally. The other parties are saying that we don't have to apply corresponding adjustment because countries accounting system and also corporate accounting system are two different mechanisms. So in the crediting mechanism, how it can be avoided. Very first thing is the registry system. That this should be use serial numbers to record and transparently track carbon credits to ensure that one credit is issued per emission reduction. Another second one is avoidance of double claiming. That considering the corresponding adjustment specifically in the crediting mechanism. One study mentioned that crediting mechanism have to develop the procedure how to identify those emission reduction in which year it is occurred, in which country it is being occurred. So also they suggested that mechanism, those programs have to develop the system to ensure that authorization for the corresponding adjustment in the host country are also in the place. The authorization means that they can use those mitigation action for their own purposes. So fifth element is negative and positive impact. So negative impacts should means that the project should not significantly contribute to social and environmental harm. The positive impact is the credits and projects should generate impact beyond the greenhouse gas emission reduction. And this could include environmental and social and economic impacts. For example, contribution to sustainable development goals and benefits from natural-based solutions. And why do we need to care about the environmental and positive impacts? Because overclaiming positive impact from the project that have not followed the safeguard is actually one of the example of greenwashing. So that you are actually, that means that it is important not to overclaim those positive impact. We have to be very realistic on this one, and also conduct several local stakeholder participation. And how it can be avoided in the mechanism. Very first thing, for the negative impact, crediting mechanism should include environmental and social safeguarding rules to ensure that there is, if there is any harm, they have to identify, and then they have to find a way to mitigate those harm. The second one, on the positive impact, the crediting mechanism should create an internal approach to assess development benefits, such as contribution to SDGs and also positive impacts from natural-based solution, for example, adaptation benefits. And then for this one, I think you can see the example from Annex, that the gold standard, for example, one of the biggest crediting program, they request all of the projects to to contribute at least 3 sustainable development goals. And then they have also developed the sustainable development goal impact tool. So from here, I would like to ask my colleague Takahashi-san to explain the details on how additionality can be demonstrated in the CDM project. So I think Takahashi-san can, I will stop the screen here.
はい。ありがとうございます。それでは、
Thank you very much. So I'd like to explain the additionality using an example here. As Temurun-san explained, additionality is the additional emission reduction insurance. There are many ways to assure the reduction. The example that I like to explain is the CDM example. If you have participated in CDM project, you would understand there are many ways to prove additionality. What is often used in CDM project is the economic analysis. This is what you see here. We have more than 7,500 projects. If you look at these projects, there are many different types: wind power and hydropower. Many of them are renewable energy related projects. For these projects, in order to demonstrate additionality, investment comparison analysis is often used. So what is this analysis? Many of you who belong to corporate would understand. If you are going to invest in project, you would use IRR, internal rate of return, as an indicator. Take a general business. You would calculate IRR to understand expected return. If you are going to sell credits, could be $10 or $20 per ton. You would have income by selling credits. You can add that income to IRR, to the revenue, to calculate IRR. And there is usually different benchmarks for different countries. So you would understand IRR level of the project with and without credit sales and compare that to benchmark rate. The CDM project's return is over that benchmark rate. You can say that the project has additionality. This is a Chinese example. Cash flow has been calculated, including credit impact, to prove the additionality of this specific project. Renewable energies on a global level are increasingly utilized. As Temurun-san mentioned, this can be applied to other VCMs. So this additionality concept, however, will be reviewed and revisited in different projects. So I'd like to pass this back to Temurun-san once again.
Thank you, Takashi-san. And okay, I hope you can see my presentation. The third element, which is about the permanence, I am going to explain in how it has been implemented in the Vera program. And in the Vera is also one of the independent, one of the most well-known independent crediting program. And they have the verified carbon standards. In the standard, they have established that if any risk related to the permanence in the project should be addressed through the non-permanence risk tool, and to determine how many credits from each project should be deposited in the buffer pool account. So then this is the, if it's the, this is just a very simple photo picture. And if it's the buffer pool, and then every project have to determine how many credits should be deposited in those buffer pool. And then credits deposited in the buffer pool, it's called buffer credits. And those non-permanence risk tool has three main categories, how they assess project risk. First one is internal risk, and the second one is external risk, and the third one is a natural risk. And then each risk has divided into many different subcategories, such as project management and financial viability of the project, and also community engagement during the project development and implementation. And then project should develop a non-permanence risk report based on this risk tool. And then this report should be assessed by the validation and verification bodies. So then they can determine how many credits that project A, for example, should deposit into the buffer pool. So this buffer pool maintains adequate credits to overcome any unanticipated losses from each individual projects. So to ensure the environmental integrity of those credits. So for example, if something happens on the project side, for example, it can be then natural disaster, or it can be done by illegal logging activities. So then if it happens, then this account should release the credits to compensate those losses. And you can see this is the Vera Registry system, and they have, this is the buffer credits. You can see different projects has different credits in the buffer account, and then none of them are at this point, none of them are not released as a compensate to any disaster. So here is the end of my presentation, and in summary, we see that the carbon offset should not undermine ambition of the corporate emission reductions, and it should need to align with the Paris Agreement 1.5 Celsius degree target. Therefore, this is the reason why quality of those offset credits is being discussed and is being criticized, and we need to also have to be very careful, specifically for the buyers, the buyers need to be very careful on about what kind of offset credits they're going to purchase, and which elements are required to ensure the credibility of the credit and the quality of the credit. I briefly explained the elements related to those credit credibility, additionality, baseline scenario, MRV, and the permanence, double counting, negative and positive impacts, and governance and transparency. We know that independent crediting programs, one of the biggest independent programs, have already adjusted their rule and guidelines to align with the international discussion on Paris Agreement Article 6. For example, the Vera, they have changed their guideline on applying to corresponding adjustment on their own credits. So they said they announced that they will label their credits to be applicable for corresponding adjustment. So, and also there have been many other discussions around the net zero strategy and also contribution to sustainable development goals. So this, I think, this can tell us these are the key areas that we need to keep in mind, and also to follow the discussion around this area. And moving forward from now on, I think we need to closely watch the discussion on COP26 Article 6 negotiation, because it will have impact on the voluntary carbon market, how it will be applied, the corresponding adjustment. And also McCann's task force scaling up voluntary carbon market, because they have developing the core carbon principles that they are going to assess credits and carbon crediting mechanism itself. And there is a new initiative that have established also voluntary carbon market integrity, and then they are going to discuss how those offset credits should be used in order to achieve net zero strategy in the business sector. And I also would like to recommend that the science-based initiative reports are very useful on the net zero strategy, and I think they have published their first draft on this one, and we may need to see closely those discussions and those areas. This is all from my side. Thank you. Here is the reference. This is all from my side. Thank you very much for your attention. And for those who are interested in here at the annex for more information. Thank you.
Temun-san, Takahashi-san, thank you very much for your presentation. Temun-san told us about the credibility and quality of the offset credits. As you can see, we have some very detailed information in some of the slides, and it may have been difficult for some of you to understand readily. But the TSVCM webinar was held the other day. I talked about CORSIA, and we talked about the criteria mainly. Now, for the companies who are buyers of credit, would also be interested in the use of carbon credit. And those are the focus in our presentation today are the aspects that should be very important. We heard about Vera and Gold Standard. These are the organizations that offer voluntary credit markets. So if you would like to investigate them in more detail, you will know a lot. We still have some time left, and we would like to answer questions that's been sent to us. Takahashi-san, can you please lead the discussion? Thank you very much. We have received some very difficult questions, and Temuru-san talked about the permanence and the buffer credit and buffer account. I'd like to be the buffer so I can supply information. Now, the first question have received 10 likes. Concerning offset credit, there are different ways of thinking. Now, there's an Indonesian forestry project, and many of them are related to developing countries. For developed nations, to use such opportunities in developing nations to achieve their own carbon neutral. I feel uncomfortable about this. Globally, what is the discussion of the situation between developed and underdeveloped countries? We have been following Article 6 in Paris Agreement, and that is related. In the Kyoto Protocol, the targets being set by developed nations and the CDM credits have been used in order to achieve the goals. Double counting was not the concept that was available then. Now, the Paris Agreement's been adopted, and all countries have their respective targets. Now, in this environment, in this situation, advanced countries, developed countries, to achieve their goals, they need to be very ambitious and without utilization of credit. That's the opinion we have heard from many people, especially in Paris Agreement Article 6. Double counting has been a topic, and ambitions, that for developed countries to have more ambitions to reach an achievement, even if they earn much agreement, the they cannot delete those credits from 2030 goals. That's the mechanism that's been discussed, and that is indeed the corresponding adjustments that Temuru-san had just explained to you. Therefore, just using use of credits to achieve the goals is not really the objectives. Rather, what should be the mechanism to achieve the true reduction has been the topic. Now, moving on to the second project, there is a global, the domestic forestry project in Japan. Are there any projects that satisfy all the discussions? The J credit is the system we have in Japan, and I am from the forestry area. That's my specialty area. And there is a project for the cutting of the trees, but now the methodologies for reduction of CO2 in the forestry is being agreed. But in Japanese project, the forestry is a project that will satisfy the requirements in the discussion. And in Japan, we may not have a lot of forestry space or land space for the trees can be planted. In Japan, we have a lot of trees with steep hills, and that may be one of the reasons why forestry development is really not spreading as much as we would have liked. Therefore, renewable energy may be the area where there's competition for the space. But in order to find solutions, we need to have good plans in Japan. Now,
So I'd like to try to answer the third question. And Temuru-san, if you want to answer the fourth question, well, first I'd like to try to answer the third question.
3つ目のメティ
I will try to answer the third question. I'd like to ask Temuru-san to take the fourth question. So METI is research study group. There has been an idea of starting carbon neutral league and try to use JCM, J credit, and voluntary credits as well. However, the use of credits by corporates, yes, it is true that they are using credits more and more. Limiting the use of credits and also the disclosure of credit use, or limiting the time period of credit use, there is a tendency or movement to try to limit the use of credits. Domestically, we are trying to promote the use of credits, but there is also a counter movement. So which is correct? Going forward, I understand the use of credit must be limited to achieve net zero. That I think is a global trend. As the question is trying to point out, we are not trying to criticize the voluntary credit. What we are hoping is to try to use corresponding adjustment to avoid double counting so that we can contribute to global emission reduction. Temuru-san, would you like to take the fourth question?
Thank you, Takahashi-san, for being my insurance for today. So for the question, まとめられた8つの視点から見て、the GCM credits credibility, asking how we can assess GCM credit credibility, and thank you for the questions. But it's very difficult to assess the credit mechanisms standards credibility. As you can see, the task force, they have more than 100 experts and technical professionals. They are doing those assessments, that they develop those core carbon principles. And it's not that I can do, even I'm not sure how we, even our team, it's not possible we can do assess the credit mechanisms, assess whole mechanism. But for one thing I would like to about the GCM is that we have sustainable development rule and guidelines, how the projects can contribute those sustainable development goals in the partner countries. And now it is developed with Indonesia and Mongolia, but I believe that there is a more discussion on many different, many partner countries are trying to develop the guidelines under the GCM. And I also know that the RED Plus project is being developed in the Cambodia, and then they have also safeguard principles, how to avoid the environmental and social harms in the project site. So if I missed anything, I hope Takahashi-san can follow up. Thank you.
ありがとうございます。あとは相当調整ですとか。
Thank you very much. So, corresponding adjustment and conservative baseline setting. Yes, JCM will be applied, and conservative baseline is something that we are struggling with. And I think that can be sufficiently assured. There are many like buttons given to another question, the credit reliability issue. Which issuers can cause such reliability or credibility issues? Even with gold standard, could it be criticized because of the low credit, quality credit? Can you answer this question, Temurun-san? Could you?
じゃあ私の方からこれ
But for this,
実は非難をしているのは環境活動家だったりNGO
the environmental activities and NGOs are criticizing. It's not that specific organizations making criticism. There has been a lot of opinions by external entities. There was a California program which was criticized. Which standards will be criticized in the future? It could be any standard that could be attacked. For what reason? Depends on how the evaluation is done. A research institute is conducting the assessment and evaluation. At the last webinar, we talked about the task force. This task force is trying to set up the credit criteria based on the criteria, whether these standards satisfy the criteria. The board members of the task force is going to evaluate and make a decision. I'm pretty sure many of you are concerned about who is going to make the evaluation. Within the task force, it will be the board member. That is the current trend. There are so many questions, we may not be able to answer all of the questions. Sorry that I was trying to answer some of the questions in text, but I wasn't able to answer all of them. Sorry about that.
Thank you very much. As Takahashi-san just said, we have more than 20 questions in line. However, the time has come for us to close the webinar. I'd like to thank you very much for sending us a lot of information. Temuru-san and Takahashi-san, thank you very much for answering all these questions. Now, for the questions that we are not able to answer today, we will have a Q&A documents to be uploaded on IJUS webpage. Now, Mr. Mulun told us about offset credit credibility and in terms of the quality. And as you have just heard, when we explained to you the TSVCM reporting during the last webinar, globally, there's been a lot of focus on carbon credit. And in some cases, we are hearing criticisms on the credit. And the credibility and the quality of such credits are becoming focused. As Temuro-san has explained to you, many of the company representatives could be possible buyers. Now, when you consider the utilization of credit, credibility will have to be considered. And I think that's the situation surrounding this topic right now. Now, as has been said, we are seeing some global international activities and trends regarding this topic. We'll need to continue to focus. We ask that you continue, the viewers gather information, but we will update on our information and share with you. Lastly, about the future climate change webinar series and questionnaire. The next meeting will be held on the September 17th, the carbon tracks, how to proceed on the accurate track. And this is going to be the summary of the previous meetings from the 1st to the 7th. What is the voluntary carbon market? What is the carbon credit? We have talked about this. TBC, AADM, TSVCM, and other global activities have been shared with us. We have received a lot of feedback, and we have shared with you a lot of information. Some of you said you have too much information. Therefore, we would like to summarize what we have discussed during the past 7 meetings, and at the same time, we would like to receive entertain questions from the audience. If you like to go over what you have heard, and if you have any questions, please come back and join our next webinar. The last webinars, the video are also on the IGES webpage together with all the Q&A documents. And the meeting from the previous webinar, the TSVCM report, is already uploaded. Also, IGES now have a webpage for Paris Agreement Article 6, and we will continue to update information for your reference. Now, as in the case of this webinar, you may have heard a lot of technical terms, including acronyms, and we plan to put together a dictionary of the technical terms and acronyms. Lastly, a request for you to share with us your information on questionnaire. In order to improve our webinar, we'd like to hear your opinions and comments and any future topics that you may be interested in. Because we have heard many voices that you wanted to go over what we have discussed already, that is why we are having the next summary webinar. And there's going to be a questionnaire sheet on the screen, or we are sending you an email with a questionnaire sheet. We ask you to cooperate. Your information will be very useful for future planning, and it will encourage our staff members to hold future webinars. So that's it from the Secretariat. And now we have come to the end of the Climate Change Webinar Series Carbon Market Track. Thank you very much for your viewership once again. And we'll see you. Goodbye.